I'm a former director of the Congressional Budget Office. I live to be worried about the budget deficit, and the reality is we have a serious deficit problem. But that's not a reason not to do tax reform. There's a basic trade-off in all tax reforms. The idea is let's lower the rates, but broaden the base. And when you broaden the base, two things happen. From an economics point of view, suddenly everything gets treated the same. And so capital goes to its most productive use, labor works where it's most productive, people get a better economy and some stimulus from that. Bad news is, some people pay more taxes because special loopholes are gone, deductions are gone. So do you want to have a better economy for everyone or a targeted relief for an individual? That's the basic game. The 1986 tax reform tells you a lot about what it takes to get tax reform done. President Reagan ran for re-election promising tax reform. He won 49 states. He wrote the tax reform bill, sent it to the Hill and said, this is what I was re-elected to do. It still took almost 2 years to get done and failed twice along the way. There's a big difference between the 1986 reform and what's being proposed right now. In 1986, the basic goal was to raise taxes on corporations and use that to cut taxes on individuals. There's nothing like that on the table now. Most of the focus is on better business taxation, making it better for businesses to hire in America, invest in America, innovate in America, and thus raise the wages of American workers. We're going to cut rates for individuals again, but we're not going to focus on the top rate. What you're going to see is a real focus on the middle class. They're going to get lower tax rates, they're going to get a simpler tax code, and so we'll have a combination of a better environment for them to get a job and get a raise, and a better environment for them to pay their taxes. The U.S. corporation income tax is out of line with economic reality, certainly out of line with our developed competitors. We're at 35%, we need to be at 20, 15% to get back in the game and to have businesses to want to invest in the U.S., sell in the U.S., and hire in the U.S. There's an enormous amount of economic research on the benefits of a good tax reform. I'd say a ballpark estimate of the benefits of a really disciplined tax reform is growth that's a half a percentage point faster forever. That's worth $1.5 trillion in revenue over 10 years and a great increase in the standard of living. If we do tax reform right, the United States will be the place to invest, it'll be the place to innovate, and that money will come back to do those things. That's an enormous possibility for better economic growth.